Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots and give you the developments and the insights you need to navigate, adapt and lead. Let's dive right in. Waits Iran's next move after the U.S. strikes 3 of its nuclear sites. The Energy Department sits down with oil giants as Middle East tensions drive fuel prices higher. President Bongbong Marcos locks in new job-generating investments following a 4-day working visit to Japan. We begin with the escalating tensions in the Middle East. The U.S. launches airstrikes on 3 Iranian nuclear sites over the weekend, raising fears of a wider conflict that could disrupt global oil supply. U.S. President Donald Trump confirms Operation Midnight Hammer, targeting Fordow and Natanz, with Tomahawk missiles also striking the Isfahan nuclear facility. Washington says it is not formally at war with Iran, but Trump has threatened more strikes if Tehran refuses to negotiate, even hinting at a regime change. Tehran has condemned the attack, but Iran's supreme leader, Ayatollah Ali Khamenei, has yet to issue a response. This escalation could roil energy markets, with oil prices already surging on supply fears. For a country like the Philippines, a net oil importer, that spells risk for inflation, interest rates, and consumer spending. Let's take a look at how global markets moved Friday as investors braced for escalation in the Middle East. U.S. stocks ended mixed, with traders on edge over the Iran-Israel conflict and uncertainty around U.S. involvement. On Thursday, the White House said President Trump would decide within 2 weeks whether or not to join the air war. But by Sunday, ahead of the market opening, Trump announced a strike on 3 Iranian nuclear sites, including Fordow. This marks a sharp turn for a president who once vowed to avoid another forever war and now raises the stakes for global stability.
The markets are betting that there's going to be, 50 basis points of cuts, this year. I do think the Fed has kind of waited for about as long as they can. I'd be surprised if we don't see a rate cut in July. Now, of course, this could all change. If we start to see inflation come in hot, that changes everything. But assuming inflation kind of stays where it is, which, by the way, is still above the Fed's 2% target. Which I think, and we've been saying this for a while, that they're going to have to revise that upward, that target officially.
The Dow Jones Industrial Average rose nearly 0.1%. The S&P 500 fell 0.2%, and the Nasdaq lower by 0.5%. Over in Europe, markets also ended mixed. The FTSE 100 slipped 0.2%. Germany's DAX climbed 1.3%, and France's CAC 40 closed up by 0.5%. Now, oil prices surged late Sunday after the U.S. launches airstrikes on 3 Iranian nuclear sites, raising fears of a deeper conflict in the Middle East. U.S. oil futures spiked 3.6% to $76.47 a barrel. Brent, the global benchmark, rose 3.2%, touching $74.59. Meanwhile, the U.S. dollar climbed 0.3%, a modest rebound after falling last week following Trump's sweeping new tariffs. The dollar, often seen as a safe haven in times of turmoil, is now being tested by Trump's America First trade policies. Markets are watching to see if it still holds that role. For the Philippines, this matters. We're a net oil importer, and any sustained price shock could feed inflation, weaken the peso, and delay rate cuts. It's a wake-up call for investors and policymakers alike. In other news, the Department of Energy meets with oil companies today as fuel prices push higher amid rising tensions in the Middle East. Global oil markets continue to climb, driven by escalating geopolitical risks that now threaten to ripple through local pump prices. Jetty Petroleum President Leo Belas says that the DOE will ask firms to stagger price hikes and consider promos or discounts to help ease the impact on motorists. For the Philippines, where fuel is mostly imported, every uptick matters. The DOE's push shows that the government is racing to contain the damage before it bleeds into transport costs, inflation, and consumer spending. Speaking of consumers, Filipino consumers should brace for a fresh round of fuel price hikes this week, driven by the escalating tensions in the Middle East. Diesel prices may rise by nearly 5 pesos per liter, gasoline up 3 pesos and kerosene by as much as 4 pesos per liter. Crude oil prices have been highly volatile as the conflict between Israel and Iran raises fears of a wider disruption in global supply. President Bongbong Marcos says that the government is ready to deploy fuel subsidies to support sectors most vulnerable to price shocks, including transport and agriculture. This comes as the ripple effects of the U.S. strikes on Iran spread beyond energy and into global aviation. U.S. airlines are facing heightened risks in the Middle East as global carriers divert flights following the attacks on Iranian nuclear sites. Singapore Airlines, British Airways, and others have canceled routes to Dubai and Doha, while many now avoid airspace over Iran, Iraq, Syria, and Israel, leading to higher fuel costs and longer flight times. The Site Safe Airspace, which tracks aviation risks, warns that U.S. operators could be targeted in the region, even if no direct threats have been issued. Meanwhile, Israel has temporarily reopened its airspace to allow rescue flights for stranded citizens. Flag carrier El Al and other local airlines ran limited Sunday flights. As conflict zones grow, so do logistical nightmares for global airlines and Filipino travelers and exporters. This is yet another headwind to watch. The Bangko Sentral ng Pilipinas is widely expected to cut interest rates by 50 basis points in the second half, even as oil prices start to rattle inflation outlooks. According to Nomura, the BSP still sees inflation as benign, giving it room to loosen policy. The firm expects 2 cuts, possibly in August and October, as price pressures remain muted for now. For businesses and borrowers, that could mean easier access to credit, but with global oil prices climbing, the question is, how long will that easing window last? Onto another front, 26 OFWs and 1 Filipino tourist have been safely brought out of Israel as the Philippine government steps up its repatriation efforts amid the escalating regional tensions. The group crossed into Jordan via the King Hussein Bridge, personally assisted by migrant workers, Secretary Hans Kakdak and Philippine Ambassador to Jordan, Wilfredo Santos. They received immediate cash aid and emergency support from the government upon arrival.
Every time may inuuwing repatriate from abroad, not just the Middle East, sinasalubong sila at minsan doon mismo sa airport, binibigyan ng cheque na it depends, 50,000 sometimes or maybe 100,000 pesos pa.
Secretary Kakdak is set to fly back to Manila with the repatriates Tuesday morning, highlighting government commitment to protecting Filipinos overseas in times of crisis. This is part of a coordinated push by the DFA, DMW, and embassies in Tel Aviv and Amman to ensure the safe return of Filipinos from active conflict zones. The Securities and Exchange Commission is tightening its watch over financing and lending companies, requiring them to submit landline contact details, especially those running online platforms and mobile apps. The SEC says companies must provide a billing statement for their landline within 15 days of the order, and the name and address must match what's declared in the Articles of Incorporation. This comes as part of a broader crackdown. The SEC has already revoked over 400 registrations for non-compliance with reporting rules. For consumers and investors, this is about accountability. As digital lending booms, the SEC is making sure that these companies can be reached, verified, and held responsible. On another front, the shares of Manila Water surged last week on strong optimism around its East Bay treatment, plant upgrade, and momentum in the water sector. The stock climbed 14.2% to 39 pesos and 40 centavos, sharply outperforming the broader market. Investors welcome news that the East Bay project is now 92% complete, a signal of operational gains ahead. The facility is designed to deliver 200 million liters per day from Laguna Lake, easing Metro Manila's dependence on Angat Dam and improving water security in the East Zone. The rally also comes ahead of Maynilad's planned IPO, further stoking interest in the country's water infrastructure space. For investors, it's a reminder that water utilities are quietly becoming a high-stakes play on urban growth, climate risk, and sustainable returns. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most. Your bottom line. Welcome back. Let's check on how Asian markets are doing this Monday morning. Right now, the Nikkei 225 is trading to the downside, lower by 0.5%. Hong Kong's Hang Seng Index is down as well, down by 0.75%. Shanghai's Composite is flat with a downward bias, and Singapore's Straits Times Index is in the red, lower by 0.8%. Here at home, Philippine shares closed lower last Friday as a fresh oil shock and Middle East tensions sparked inflation fears and rattled investor sentiment. The PSE index slipped 0.3% to 63.40, pressured by surging oil prices, a weaker peso, and growing uncertainty over a possible U.S. strike on Iran. Traders also reacted to the BSP's rate cut and positioned ahead of the FTSE rebalancing. FTSE adjustments often trigger capital flows and reflect global investor confidence in emerging markets just like ours. Now, with oil still hovering near 4.5-month highs, the peso stuck above 57. Analysts are warning of higher pump prices, costlier imports, and a potential rebound in inflation. As the week begins, markets are laser focused on Washington and Tehran. Any escalation there could drown out the BSP's pro-growth signals and fuel a wave of risk-off trading across the region. Now, taking a look at our market today, as of 10:19 this morning, we are seeing that risk-off sentiment. Looks like the main gauge is entrenched in negative territory so early in the morning. We're at the 6,200 level. We were just at 63 last Friday. So it just goes to show how scared and worried everyone is over what's happening and what could happen in the world with oil prices and everything else. The main gauge is down by 1.5% to 62.44. The broader all shares index down as well, down by 1.2%. The financials, industrial holding firms, property services, and mining and oil counters are all in the red, with the holding firms and the services counter down the most. Volume is thin at 295 million. Value is high, however, early in trade at a little over 2 billion pesos already. So that's all going to selling, unfortunately. Market breadth is very bearish. We've got 111 decliners, 37 stocks unchanged, and 37 advancers. Now, the Bilyonaryo news channel has yet to obtain the latest exchange rate of the peso against the US dollar, as the official website of the Bankers Association of the Philippines, or BPAP, where we draw our currency data from, is currently inaccessible. BNC has reached out to them for comment, but we have yet to receive a response. In any case, on another front, the exposure of Philippine banks to the property sector drops, falling to 19.41% as of end March amid cooling demand for housing loans. Latest data from the Bangko Sentral ng Pilipinas shows this is lower than the 20.31 recorded in the same period last year and down from 19.75 at end December. It's now at its lowest level since March 2019, when the ratio stood at 19.2. Joy Roy Bondoc, the director and head of research at Colliers Philippines, says the drop reflects a softening in consumer demand for housing loans, as high interest rates and tighter budgets push buyers to the sidelines. For the Philippine banking sector, this could signal a shift in lending strategy. But for property developers, it's a red flag that demand in the mid to low income housing segment may be losing steam. Now, this comes after a flurry of data showing the Philippine economy is losing steam. Growth is slowing, investment is soft, and global demand remains weak. But one sector appears to be defying gravity: real estate. Inflation is cooled, but a fresh oil shock and geopolitical risks could reignite price pressures. And while interest rates are easing, the recovery path remains uncertain. Still, property sales from Makati to Palawan are moving. So what's behind the resilience? Is this the start of a new real estate cycle or just the dead cat bounce? Joining us live is David Lichu, the CEO of Lichu Property Consultants. Hi, David, and thank you for being here with us.
Thank you, Maiki.
We're coming off a big oil price shock, given the tensions in the Middle East. That's on top of a slowing domestic economy, weak private investment, muted global demand. On the heels of the pandemic and the POGO exodus, how is the Philippine real estate market doing today?
It's surprisingly gracefully doing well. I've been to so many parts of the world, and property markets are being destroyed right now. Work from home, wars, so much uncertainty, oversupply, interest rates. I mean, if you look at interest rates in US versus Philippines, they're not very far. It's kind of ridiculous how a country like the US or many parts of the West have the same interest rate levels in Philippines. So we have to be very grateful that there's so many things going on very well in the Philippines. Hong Kong, for example, a market that we all love, we're all very familiar, that's had an 8-year downward spiral. Property prices there across many levels are down 50%, and they have 2 to 5 more years of this. So the Philippines is not doing that. The problem is primarily isolated in the mid-end condo market in Metro Manila, and possibly Cebu office and Metro Manila office. But outside of these three sectors,
what's causing that? The dire straits in that middle income segment, and a lot of developers are focusing on the luxury market right now. Megaworld is shifting its strategy and to focus on the upper market crowd. What's happening right now in the middle class segment? Why is there so much pressure there?
the middle class doesn't have much of a safety net. The lower classes have the overseas remittances. The high end have the high end, but the middle market was eaten up by interest rates and inflation. They really are the hardest hit, and then their frontline businesses have all been compromised, and so. Like for example, the dependence on POGO sector in the economy, whether real estate or food or other industries, were really hit hard with the ban on the POGO sector. So that's why this mid-end market is getting hit badly. And then you've got the condo situation where COVID delayed a lot of supply. Now we have these completed, and they all became lumpy.
Yeah, give us a picture of the real estate market today. Following COVID, a lot of the construction was delayed, and it's all coming now. And so that talk to us about this oversupply issue that we're facing.
The oversupply is just in the condo middle market. The office market has stopped producing office space. Well, it's producing very little office space in the next 6 years. And so we think that Bonifacio's out of this oversupply situation, Makati 1 more year, and then the rest of the market, Alabang maybe 2-3 years, and then the Bay, Ortigas, Cebu, maybe 5 years to get out of this oversupply.
Speaking of Makati, there's talk of this transformation going on in that major city. And it's pretty exciting. From office to residential, there are going to be new zoning rules, which is going to pave the way for mixed-use properties. It's going to pave the way for office and residentials. And it's just going to give developers more latitude to move and consumers more options to buy. Can you talk to us about what you think about what's happening with the Makati and the rezoning there?
Yeah, first of all, the capital's moving from BGC because there are only 2 credible sellers in BGC, and the market's probably not ready to pay those prices, and so capital is moving back to Makati. And you're going to see a massive renaissance in Makati because of these new zonings. It's made projects become more viable, more flexible, more adaptable, and more green. And so that's just going to make Makati a much better place in the next 15 years.
You seem pretty excited about everything that's going on with the rezoning in Makati.
Yeah, super. It's they're going to allow hotels on almost every lot, whereas before they were very restricted.
And that's going to help developers maximize profitability for these spaces.
Yes, definitely. You're going to be allowed retail of all kinds. And they're compelling them to open up to 10 p.m. to make Makati more viable nighttime, because it's such a big chunk of it depends on the workday traffic.
Yeah.
So they're
They
going to
want that
open up a lot of
recreational
retail
traffic as well.
Yeah.
Okay, David, what's hot now outside of Metro Manila? There's a lot of talk about Batangas being the next, big property play because of all the infrastructure that's headed that way. Talk to us about what's happening. What excites you from north to south?
Yeah, Batangas is one of my favorites because it's close. And it's going to get nearer, closer with all the infra happening there. Very excited about the Rockwell beach project with the golf course there. I think they're coming up with 27-hole golf course that will rival Anvaya in the north. And then I'm very excited about Bohol and Palawan.
Why?
International airport, very accessible. Bohol offers many things to many people, from mountains to hikes to river tours to beach. Diving is one of the best in the world.
Tourism, are you optimistic
very,
about
very
the tourism
excited
play
about
there?
tourism. I think if there was a way for the country to pivot, it could pivot to tourism. If you look at Thailand, for example, you talked about the downgrade from 6% to 5.5% for the Philippines. Thailand got that graded from 2.8% to 1.8%, and primarily because many of its engines are failing. Very little investment in manufacturing going in. Tourism is decimated because of various things in Thailand, but still their tourism traffic is still very, very high, very far compared to ours, and we will figure that out. I think Palawan and Bohol are our solution to our answer to Bali and Phuket. And yeah, you're going to see a lot more high-end projects coming up. The first JW Mart is coming out in Bohol. That's exciting.
We've got amazing beaches. We just really need the infrastructure to help drive the tourism play.
Yeah.
On that front, David, what do you need from the 20th Congress in order to support a thriving real estate sector in the country?
I think we have to protect property rights because it's easy for you to buy, for example, 10 hectares in El Nido or Pangasinan. But so many people harass you, scammers will harass you. So property rights, improving the court system, allowing foreigners to lease land up to 99 years. If you don't want them to own land, then let them lease it for 99 years with certain conditions. I think that will be quite helpful across the board with no exceptions. Title, so many government bodies own land, but they're not titled properly, or they have impediments and liens and encumbrances. So, and then enforcement of zoning. We have so many natural habitats that will be destroyed if we are not firm with zoning. We are one of the few countries that are progressing without manufacturing. Manufacturing spoils the ecology. We didn't have manufacturing, so Palawan still looks pristine. Boracay, we made a mess of it because of the sewage system, because we didn't have a sewage system. Manila Water is great. I mean, and Maynila, because they will roll out sewage systems all across the country, and that will fix the environment.
We need that first before we can bring anything else in. Okay, David, still on the political front, there's a lot of noise about the possible impeachment trial of Vice President Sara Duterte. Is this putting off investors or investments in any way from the foreign, especially from the foreign side? What's your take?
I think the foreigners will be concerned, some of them. Most of them are used to the Philippines. They know that it's got this very chaotic political situation. It's not an issue for the locals, definitely.
Yeah. They don't care necessarily about who's at the top. They're just more concerned about price, yield, and location, and really growing their investments.
Yeah, it reminds me of the statement that Joy Salceda made once, that he supposedly said that if you put a dog there, it won't be a problem, even if you put the dog in the office. So I think people in the Philippines have gotten used to all this circus. And I think you just have to be very wary about the basic economics. Now, we have to remind people that the Philippines is a counter-cyclical market. So as the world goes into problems, more jobs are created in the Philippines because of the BPO sector. I sit on the board, and for the last 2 years, we have seen a massive spike in interest from foreigners, from companies wanting to set up in the Philippines for the first time.
That's
to
an
do
interesting,
BPO.
interesting
Yeah.
take. The Philippines is a counter-cyclical market, and when it's bad over there, it means things can grow here on our end. Okay. On another note, David, still on property, what's driving demand right now? Is this still, a locally driven market? Are you seeing more interest in foreigners? Foreign
Office is
investments?
certainly being driven
For residential
by,
and commercial.
for office commercial, definitely foreigners. So the BPO sector is sweeping through office. That's why you're seeing vacancies go down from 20+% to now 18%, going 17%. So that's a very healthy number. We're still absorbing 1 million square meters of new leasing in the office sector, one of the largest numbers you'll find in the world. In residential, it's still predominantly the local sector. In tourism, it's still 92-94% local tourists. The foreign tourists are very small. And the challenge is how to grow this tourism base from 6% to hopefully double-digit numbers.
Okay. What are the trends now? What are developers doing? Is the push more for vertical developments or horizontal developments?
So first of all, everyone is holding on to cash. Everyone. And now sellers are becoming more reasonable with their asking prices. If the market is at 600, they want 700, 800. Now they're coming down to closer to 600, as an example. So developers are reacting by saying, okay, we'll preserve cash. We'll only spend the cash on good deals, the ones that are relevant and strategic. Second is that they are trying to flush out all the excess inventory. And so RFOs are great because you don't have any risk. You can take a bank loan. You can pay for the balance over a long period of time. And then they're expanding into higher-end residential, which is why MegaWorld's coming out and trying to get a position in the luxury market. I am very excited about this new Ayala under the new leadership, where they're very focused on brand, they're very focused on quality, they're very focused on workmanship, and also the girth of the size and breadth of their
So you see the
operation.
growth in this second half and beyond coming from the luxury property segment?
Yes, definitely. And then there's also a lot of money being poured into data centers. And the industrial market is opening up to data centers. There's about 14 different stages of construction, all in the hopes that IoT and AI will create demand for all the supply of data centers.
On a more personal note, David, you've spent your career selling properties.
Yeah.
Ever think about flipping that around and becoming a developer, perhaps?
Well, I'm a shareholder in the W Group, so we have 5 buildings right now. We're the 3rd largest office owner in BGC, and we have a 6th project coming online. We've got a couple of other investment with other partners. So yeah, it's so
you're
whatever
gonna
it
be
is that
wearing
I'm
both
saving,
hats.
I'm
Okay.
investing in developing.
Okay. If you had money now, where would you buy property in the Philippines?
Forbes.
Forbes.
Yeah.
It-
In the last 60 years, Forbes has been the best peso investment in the Philippines.
Yeah, it always seems a little out of reach, but if you can make that push, it's a fantastic investment because
It's
of scarcity.
always out of reach. And I keep saying to people, you have to look at this as an opportunity because for the last 5 years, Forbes has been growing at slowest pace in 60 years. Okay, that's an opportunity to buy because when the boom happens, prices in Forbes will climb much faster.
Okay, we've got just a few moments left. Just a quick fire round, David. Palawan, Siargao, Batangas, what's hottest right now?
Batangas.
Batangas,
Palawan,
okay. Next best thing, townships, data centers, or retirement estates?
Townships.
Okay. Top 5 developers in the Philippines based on market cap and branding.
I think market cap, definitely SM Prime, Ayala, I think Robinsons, MegaWorld.
MegaWorld.
Yeah, and then in terms of
last.
branding, definitely Rockwell and Shangri-La and Ayala.
Okay, hottest location outside of Metro Manila and Batangas. You've said a lot about that already.
Bohol.
What's next?
Bohol. Palawan.
All right. Best bet in a rate cut cycle, residential, commercial, or both?
Go to townships, invest in Makati and Bonifacio, whatever you can acquire in that area. But if you look at opportunity, maybe one thing we can look at is property has been climbing 5% a year, okay? Especially in the last 5 years, on average. But if you look at stocks, of property stocks, you look at SM Prime, it's down by almost half. Ayala Land, a little bit more than half. JG Summit stock, a company that's producing 30 billion net a year, is trading at 3 times earnings, 4 times earnings. It doesn't make sense. So I think in addition to actual brick-and-mortar property, the other opportunity is buying and accumulating these three assets, and that's just 3 of the best examples I can think of right now.
All right, thank you so much for your time, David Lichu, co-founder and CEO of Lichu Property Consultants.
Thank you very much.
Okay, we're taking a short break. Business 360 will be right back. Welcome back. President Bongbong Marcos is back in the Philippines after a 4-day working visit to Osaka that yielded new deals and diplomatic wins for the economy. During his trip, he unveiled the Philippine Pavilion for World Expo 2025 and sealed agreements on job-generating investments in clean energy and green shipping. Among the highlights, a waste-to-energy project and a green shipbuilding initiative in Cebu. Moves that position the Philippines as a potential regional hub for sustainable industry. The president also held talks with Japanese tourism and aerospace officials looking to boost tourist arrivals and explore space-based technology for disaster response and agriculture. Before flying home, he met up with members of the Filipino community in Osaka, commending their hard work and global reputation for professionalism. In a world increasingly driven by green tech and resilient supply chains, the trip was more than a show of diplomacy. It was a bet on the Philippines' future economic role in the region. Now, in the wake of growing political fallout from the midterm elections, power blocs are splintering and accusations are taking center stage. Vice President Sara Duterte is now alleging foreign interference in the Philippines' elections. Speaking at an event in Australia, VP Sara said she's in talks with political allies and PDP Laban on ways to improve the country's electoral system following the midterm results.
That is what we are working on, and that is what we are pushing for with our senators that are allied with the political party of President Duterte. Discuss ways where we can improve on the election. There is some sort of foreign interference and influence in Philippine government and political affairs. And yes, as I said, we're discussing with senators, particularly Senator Amy Marcos, on how we can make sure that election results are credible.
Duterte had earlier accused the elections of fraud after several PDP Laban candidates lost. Now she's doubling down, calling for reform while fanning doubts about the vote's legitimacy. The vice president also appeared to take a veiled swipe at House Speaker Martin Romualdez, responding to an audience member from his stronghold in Tacloban City.
Tacloban, kayo ang dahilan kung bakit nagkakaproblema ang representative. Kayo talaga man. Dahil sa inyo, magulo ang House of Representatives.
Filipino drivers are going electric, and AC Mobility, backed by the Zobel de Ayala family, is leading that charge. With sleek EVs, ultra-fast chargers, and a growing national footprint, AC Mobility isn't just in the game, it's shifting the future of transport. Here's our mobility correspondent, G. Baroga, with the details.
As Filipino motorists become more eco-conscious and tech-savvy, AC Mobility, led by Bilyonaryo heir Jaime Alfonso Zobel de Ayala, is positioning itself at the forefront of the country's electric vehicle revolution.
We are introducing innovative vehicles we are expanding infrastructure, and we are fostering the mindset that is needed to accelerate the Philippines' transition to a cleaner and more sustainable future for all of us.
AC Mobility now claims 90% share of the Philippine EV market. This dominance is fueled by its growing portfolio of brands from BYD, Kia, and Volkswagen to dealerships for Honda and Isuzu. But the company isn't just focused on vehicle sales. It's building the infrastructure to support long-term EV adoption.
We are on track to reach our ambitious goal of over 700 charging points by the end of this year, with stations already operational across the region. We have 3 locations already powered up, and we are expected to double by year end.
Among the notable developments are the country's fastest EV chargers, with 240 kilowatt and 480 kilowatt units now up in Makati, aimed at slashing charging time for busy urban motorists. A key driver of this growth is BYD Cars Philippines, whose lineup has rapidly expanded just over a year since AC Mobility entered into partnership with the Chinese EV giant. And their latest model, the BYD Sea Lion 5 DMI, is now in the country.
This is growth that reflects a keen understanding of the evolving needs of Filipino motorists, striking a balance between range, practicality, and of course, performance.
The Sea Lion 5 features BYD's hybrid tech called the Super Dual Mode Intelligent, which allows the vehicle to run over 1,400 kilometers on a full tank and full charge.
Basically, the vehicle's priorities when you start the vehicle, okay, the electric motor engages. The battery is charged by the engine as you move and as deemed necessary.
The new model also includes high-end features such as soft leather seats and a rotating touchscreen infotainment system, reinforcing BYD's appeal to the premium mass market. To mark the launch, AC Mobility is offering the Sea Lion 5 DMI at an introductory price of 1.198 million pesos, 50,000 less than its retail price.
As Filipino motorists demand for a cleaner, smarter, and more connected mobility solutions, Jaime Alfonso Sobel de Ayala and AC Mobility appear poised to define the EV landscape in the Philippines, not just with cars but with a full ecosystem built for the future. For BNC Mobility, G. Baroga.
UN Secretary General Antonio Gutierrez is calling for urgent action to halt the escalating violence in the Middle East. Speaking at a UN Security Council meeting on Sunday, Gutierrez backed a draft resolution demanding an immediate and unconditional ceasefire. But it's unclear when the 15-member council will vote to pass the resolution. Needs at least 9 votes and no vetoes from any of the 5 permanent members: the US, France, Britain, Russia, or China.
We must act immediately and decisively to halt the fighting and return to serious, sustained negotiations on the Iran nuclear program. We need a credible, comprehensive, and verifiable solution, one that restores trust, including with full access to inspectors of the IAEA as the United Nations technical authority in this field.
Here at home, the Department of Foreign Affairs says the Philippines is greatly concerned over rapid developments in the region. The DFA urges all parties to choose diplomacy over escalation, warning that the conflict could pose serious threats to regional and global stability. Under growing global pressure to contain the crisis, world leaders are now pushing for talks over troops. As violence escalates in the Middle East, French President Emmanuel Macron and Pope Leo are making urgent calls for diplomacy over war. Following U.S. strikes on Iran's nuclear sites, Macron called for a return to diplomatic and technical talks, stressing the safety of French nationals in both Iran and Israel. Pope Leo echoed that call, urging leaders to choose dialogue over destruction. He also reminded the international community not to lose sight of other crisis zones, particularly Gaza, which still faces a deepening humanitarian emergency. As the region teeters on the edge of war, Israeli Prime Minister Benjamin Netanyahu says their military objectives in Iran are nearly complete. After Israel launched a surprise strike nearly 2 weeks ago, it has traded drone and missile attacks with Iran, escalating the conflict to new levels. Now, following U.S. airstrikes on Iranian nuclear facilities, Netanyahu says they've almost achieved their goals, pointing to Iran's alleged ballistic missile and nuclear programs.
You asked about the enriched uranium. Look, we're following that. We've been following it very closely. I can tell you it's an important component of nuclear enrichment. It's not the sole component, not a sufficient component, but it is an important component, and we have interesting intel on that, which you will excuse me if I don't share with you.
At least 20 people are dead and dozens injured after a suicide bombing at a church in Damascus, marking the first major attack in Syria's capital since the fall of Bashar al-Assad. Syria's Interior Ministry confirms the bomber was a member of the Islamic State. A security source says 2 men were involved in the attack, including the suicide bomber himself. This is the first reported suicide bombing in Damascus since Assad was toppled by an Islamist-led insurgency last December. The IS has targeted religious minorities before, including a deadly strike on Shiite pilgrims in 2016. For global markets, this reignites concerns over security in the Middle East. Syria sits at a critical geopolitical crossroad, and any destabilization could disrupt energy flows, deter reconstruction investment, and rattle business sentiment in neighboring regions. From global flashpoints to tech frontiers, disruption is coming fast. Tesla has just kicked off its first real-world test of self-driving taxis, and paying customers are already on board. Tesla deployed a small fleet of robo-taxis in Austin, Texas on Sunday, with CEO Elon Musk calling it the official launch. Social media influencers posted their rides online, showing vehicles operating with front seat safety monitors on board. 10 units were deployed, though it's unclear how much control the monitors actually had. If this test run proves successful, Tesla still faces a long road ahead to scale operations in Austin and other cities while delivering on Musk's high-stake promises. Now, before we go, if you're curious what life on Mars might feel like, you don't need a spaceship. Just head to China. In the Gansu province, China has built the world's first Mars-themed base right in the middle of the Gobi Desert. Codenamed Mars Base 1, the site offers a fully immersive experience, complete with simulated Mars rovers, probes, and even mock rocket launches. The base features over 30 interactive projects, including a hydroponics lab that shows how plants could grow in Martian conditions. It's a mix of science, education, and futurism, designed to inspire the next generation of space explorers. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.